Welcome back. So we've got the market open, which is a pre-open, that is, which is about 14 minutes away. And as we've been discussing, the texture is looking for the market a little iffy, jumpy, a large volatility and unable to sustain at highs. Anuj is here with a quick trade setup. Anuj, morning.
Morning, Prashant. I'm going to start with a chart which is, scaring a lot of people, especially from the global market point of view. This is the US 10-year bond yield chart. Now, what you'll see here is an interesting bit here because it sort of made a double top, and after that we had seen a collapse. Now, this was the time when the market was discussing whether the rate cut would happen in March itself. Over the last few weeks, obviously, that has been thrown out of the window. But slowly it's inching up and now threatening to cross this line again. I mean, if it breaks this line, then the global markets are in for a sharp correction. And that is the reason that you're seeing that violence, if I might use that word, in some of the biggest markets like US and China. That chart is very important. Now, coming back home, of course, on the Nifty and the Bank Nifty, it's a market for day traders and for program traders because the market's been respecting both support and resistance. And the next big cue, of course, comes from the RBI. As I said, the global cues are getting quite violent. So in that sense, you've got to keep some focus on what's happening domestically. In fact, there's a massive carnage going on in small caps in China, for example. Indian mid caps, of course, a different beast altogether, running on domestic liquidity. As of now, the major trend is buy on dips, the larger trend that is. Now, cues from here, as I said, RBI policy and language, that will be crucial. That's something we'll get. The MPC starts from today. We get the outcome on Thursday. For starters, today, IT stocks could be a bit weak because of that bond yield and then move in the NASDAQ. We need to see the intraday moves. The large private banks, they are becoming a bit of a problem point for the market. HDFC Bank, for example, is within 4% of 52-week low, and thank God for that clarification. Otherwise, there could have been some more trouble over there. The market focus may remain on individual stocks, specifically PSUs, till the time you have some clarity on the index. Now, giving levels on the Nifty, the first support is 21,727, yesterday's low. And even if that breaks, as long as 21,658 is holding, the market's fine. On the upside, the first resistance comes in at 21,964 and then 22,126, which is the prevailing all-time high. On the Bank Nifty, we ended right in the middle of the trading range of about 450-500 points. That range right now is 45,500 to 46,200. If you can smartly play this range, perhaps Bank Nifty is for you. Otherwise, maybe you want to give it a wide berth for now.
Okay, I'll take that as caution. Thanks a lot, Anuj, for joining in and telling us what to expect from the markets and how you should be positioned there.